President Trump hits the markets with a Truth Social post early this morning saying that he will impose a 50% tariff on EU goods. They're not making any progress as far as the trade talks go with the EU. So starting June 1st, 50% tariff on all EU goods coming into the United States. Next, he also posted on Truth Social that he spoke with Apple's Tim Cook, saying that unless he manufactures their iPhones in the United States, he would impose a 25% tariff on those phones coming into the United States. So some good news coming out to start the U.S. Trading session. I'll go through the technicals that are driving both the euro, the dollar versus yen, and sterling versus U.S. dollar in this video. So let's get started. When I first looked at the chart coming in this morning, I saw that the price had moved up in the euro versus U.S. dollar up to the 61.8%, or toward the 61.8% retracement. That level also corresponded roughly with these highs going back to the month of early the month of May, I guess, right here and here and here. And those highs and 61.8% retracement would be a nice target. Well, little did I know that seconds later, Trump will come out with his announcement on EU tariffs, and that has forced the price back to the downside. We are trading back below the 50% retracement here at 1.1318 with the 100-hour moving average as the next key target on the downside at 1.12914. Seems like that would be the obvious path for the euro versus U.S. dollar, but things aren't necessarily so obvious. We are seeing yields move lower with the idea that, if all these tariffs are going to go into slower growth, slower earnings across the board, and here we go again. So anyway, the 100-hour moving average is the next key target. We did base against that 100-hour moving average in trading earlier today. That pushed the price sharply to the upside. Now we're retracing those gains, and we'll see if we come back down to the 100-hour moving average. On the top side, I would take a move back above the 1.1362 to have traders again looking toward the 61.8% retracement, which has a lot of resistance up there. Let's take a look at the dollar versus yen, and it's reacting more to the downside here, making new lows in the last few minutes of trading. Again, yields are down with the 10-year down minus 9.2 basis points currently at the moment, and that has the price extending to new session lows for the week, taking out the low price that we saw in trading yesterday. That low price did find some support yesterday near this swing area right through here, with the most recent swing lows coming to play ahead of the low price that we saw in the month of May down here at 142.33. So we did find those support buyers, and we did bounce back in trading into the close yesterday, moving all the way up to and through the 200-bar moving average on the 4-hour chart. The problem is we had these other moving averages in play way up here, so there's a whole progression of things that need to get to and through, including the 50% retracement. I couldn't do that. In fact, we moved just a little bit above the 50% retracement of this move to the upside, but could not sustain any momentum above that level, and we rotated back to the downside, back below the 200-bar moving average in the process on the 4-hour chart. That's a screen line right here. And that gave the sellers to go ahead to push lower in the last hour, the last few minutes. We've seen the rotation further to the downside, breaking below this old lows right through here between 142.72 and 142.90. Stay below that level. I'll have traders targeting these two lows right here. These are the lows for May again, coming at 142.33. And then we have this swing area down through here with a number of different swing lows coming in play through here. And then we reversed with resistance here, moved back above and used it as support. Most support down here. We had the extreme down to below that level, but 141.64 up to 142.109 would be the next key target on that side if we continue that momentum in that direction. It would take a move above 142.91 now to give the buyers some hope with a rotation back toward the 61.8% retracement, the next target. Finally, let's take a look at the sterling versus U.S. dollar. And Trump did have some positive comments about the UK, suggesting that they should, I think, buy oil from the U.S. or make sure that he has his control over all of their aspects of their economy. And we saw the price move up to a high 1.3515. If you take a look at the daily chart, that took the price above these highs right through here, which came up to 134.90 was the highest of those highs. Actually, it's higher than that. anyway, let's see, move that up there. Kind of came right up to that high right there, near the 135.03. So that was a resistance area up through here. We did seem to find some willing sellers against that 135-ish type level, and since rotated modestly to the downside. We're going to need to get above that level in order to increase the bullish bias going forward. I guess we made it. We did get above it. We moved up all the way up to 135.15. You get the point. Go back to that point, find off the daily chart and see what it targets to. But buyers are certainly more in control in the pound versus U.S. dollar as the markets react to all the headline news. It ain't going to be easy, folks, just like it's not easy for me to get this Fibonacci up there. So I'm going to end it right there. My name is Greg McCloskey. Good fortune with your trading. Bye-bye.